An interesting session in the Asian markets. They surrendered earlier gains, and heading into these midterms, the market perspective was that a divided Congress was a base case scenario, and there was a sense that the markets could live with this. But as the session wore on, the market started to reassess that view and seemed to be quite perturbed at the prospect of gridlock. So the way that that's being expressed is really in the currency markets. The dollar's on the defensive, which has offered something of a reprieve to EMFX. But broadly, I've got to say, out here, sentiment still remains pretty muted because of the global growth concerns, because of the fear of the Fed as well, and, of course, the tech sector knife fight over valuations. And then, of course, you have the deepening trade conflicts. And I wanted to talk about that because that remains a big risk for our markets heading into G20. As far as the midterms are concerned, it looks as though Mr. Trump, seen from the perspective out here amongst a lot of investors that we've talked to, is going to lean on his executive powers to go harder on trade policy versus China. And speaking of which, we got a read on China FX reserves for the month of October, holding above the critical level of $3 trillion, but only just, but suffered their biggest monthly drop since December 2016. So there are implications there for the currency and dollar yuan at that critical level of 7, which we keep trying to test. So this is managed depreciation. Fear of the Fed, speaking of that, FOMC is the next big central risk for our markets. That's how we look out here. I'm going to push it over now to my colleague Willem Marx in London for a read on the European markets. Willem.
Thanks so much, Sri. So yeah, as you can see, equity investors here in Europe, pretty positive picture so far with the 4 major indices all well over 1% at this stage of the day's trading. Worth checking in on the local currency pairs as well. Compared to the dollar, you can see euro stronger by almost 0.75%. Similar picture with sterling, cable there more than 0.5% higher than it was. And dollar Swiss, worth looking at that as well. The Swiss franc performing pretty strongly against the dollar as well. In terms of some of the gold prices worth watching over the last 24 hours or so, you can see that spot price is up now 0.7% on the day's trade. Another potential area where investors can go looking for yield ahead of the dollar. In terms of the major sectors here to watch here in Europe, you can see all of them, of course, well into positive territory. Basic resources worth watching. We've seen mining stocks here in Europe performing very well. Cars, healthcare as well. Let's take a look at healthcare in a bit more detail. You can see those major stocks here, Swiss, German, British as well, all performing pretty well. They've got exposure to healthcare spending in the US, some of them. So you'd imagine investors looking at that result from the US midterm and thinking there might be some positive news coming out of this. If we look in a bit more detail, just very quickly, auto sectors as well, you can see that they are all performing pretty strongly. They've been at the center of these trade tension disputes over the last year or so. BMW one exception. Net profits down remarkable amounts this morning, and their CFO is saying they expect to see continued trade tension between the US and China weighing on their profits, guys.